You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is time once again to commence our broadcast week here on the Options Insider Radio Network. What a great week we have in store for you this week. Of course, the Option Block coming up for you in your hot little hands right now. Later on today, we got the crypto rundown with our pal there, Mr. Greg Magadini, Mr. Meatball's nemesis in life there to break down the crazy year that has been and all things crypto. Coming up tomorrow, we got Mr. Steve Sosnick from IB answering all your questions over there in the Pro Q&A, so get them in pretty soon. Wednesday, we got a double dose of Q&A action for you. Got an Options Bootcamp live, of course, and later on, a rare live huddle with Mr. Overby. Thursday, of course, we got second episode of the Option Block and TWIFO year-end check-in there with Mr. Derek Salmon, the guy who runs pretty much everything options over there at CME. He's a good guy to talk to about all things futures, options, and wrapping up the week, of course, with Vol Views. Got Mr. Jem Carson back. You guys liked him last time. He had a ball last time. He's been bugging us to come back on. He'll be back on Friday, as well as, of course, oddities. So you got quite the slew of content heading your way this week. If you want to get access to all that cool stuff on the pro side and oddities and everything else and join us live, you know where to go. TheOptionsInsider.com/secret club. It's a secret, even though the word's kind of getting out there. And, of course, before we keep going, it is Monday. So this is for all of you out there who have written in to say you love it, including Uncle Mike, who requested this game. And for that one guy who said he didn't, just skip ahead 5 minutes, because it is time now, listeners, to name that 80s wrestler.
American dream. He's just a common man, working hard with his hands. He's just a common man, working hard for the man. Hey, he's American dream. Hey, he's American dream. If you're black or white, redneck, funky, that's alright. Blue-eyed with a lot of soul, common man has got his gold. Hey, he's American dream.
I can let that one go. We're rocking out here in the studio to that one. That's a fun one. You know, you got to love that 80s bit of funk, the 80s little bit of twang that seeps in there. They just don't make tunes like that one anymore. That's a good old original from the early days. But this character, you know, this guy, he had a run in the WWF. He wasn't, I don't think, as known for that run early on. He came back later, I think, got more well-known to the WWF fans. But he did kind of make his name in other organizations. But he was active in the 80s, and he did flirt with the W back in the 80s because obviously he had some theme music there. And his theme music is quite legendary. Let's go around the horn. Let's see. Who should we give a chance to? Uncle Mike got it last time. Let's see if we go out on the second try. Let's go give him an attempt to steal the crown this week. Let's go back out to Taker's neighbor, a.k.a. Mr. Mark Sebastian from OptionPit.com. A, welcome back to the program. Give my tip of the cap to Mr. Taker. And then B, can you name that 80s wrestler, sir?
Well, I will say that was much easier than the one from last week, which I believe was pretty hard. And I'm going to go with the father of Dustin Rhodes and Cody Rhodes. One, American Dream, Dusty Rhodes.
Yes. He did spawn a few wrestlers who are now kind of taking it to WWE over there at AEW. So a bit of a competitors to WWE. But yes, it was the American Dream, Dusty Rhodes. It's just a fun tune. Fun one to say out there. All right, and let's also go out to the uncleest of Mikes. Looks like he's having some technology issues. The Skype gods are not smiling upon him in the magical, mythical hamlet known as St. Charles. So, Mr. Uncle Mike, A, hopefully you could hear me. B, hopefully you could hear that song. And then C, if so, what are your enduring thoughts of memories of the American Dream, Dusty Rhodes?
Oh, many fond memories of the American Dream, Dusty Rhodes. I did hear the song, and so it's another one of those things to where he if you'd have told me what is Dusty Rhodes' theme song, I would have never known it. But I mean, when they say the American Dream in there, I mean, if there's anyone else that's saying that they're the American Dream and it's not Dusty Rhodes, then well, that's a problem. But no, a lot of fond memories of the American Dream. His feud with the Nature Boy Ric Flair. Dusty Rhodes was known as the more common man. Ric Flair, the self-proclaimed guy that said that he was born with a silver spoon. They had some classic battles. Dusty Rhodes, he was not shy about going underneath the ring and then coming out totally bloody. This guy gave everything for pro wrestling, and he was very entertaining to watch. He didn't have like the steroided out body that a lot of the wrestlers of that era had.
No, quite the opposite, in fact.
Yeah, he definitely did not. But he was for the common man. And that's what he was all about. So much respect for the American Dream, Dusty Rhodes.
All right, and much respect for our listeners as we dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading, what is lighting up our screens out there. Bit of an interesting one out there this morning. We had a little bit of red on the screen earlier this session, and Vol was getting a little bit of its lift back. Now we're seeing the sell-off accelerate a little bit, and the Vol actually coming in. So Vol kind of got the weekend back early with aggressively, and then now is giving it up as the sell-off exacerbates. So will the Vol now start catching up to the sell-off? We shall see. As we're coming into showtime, the Dow threatening a 1% decline off about 0.9%. S&P closing in on 0.75%. The NASDAQ a little bit over 1% out there right now. And all of our vol products pretty much close to almost exactly in some cases back to where they were on our last show. VIX coming into showtime was at about a 20.5. That puts it up about half a point from where it was this time last show. So we were flirting with the 20 handle last week. Of course, our poll last week went out right around the 20 handle. We'll get to that a little bit later in the show. VVIX was at about a 122 when we kicked off the show, up about 4.5 points. VXX at about 21.5. That puts it almost literally unched from last week's show. UVXY 1565, also unched from last week's show. And VolQ coming into showtime was at about a 2135. It's up about a tenth of a point. So a lot of nothing really pretty much between last show and this show. Will that stay the course? Will that change? We shall see. Let's go back to our winner now of today's Name That 80s Rap. In fact, Mr. Meatball, I have a bonus gift for you, sir, in terms of what you get to do now as the winner. Not only do you get to go first as you win our challenge, but you get an extra bonus. So when I say so, sir, when I hit the button here, I want you to just tell me when to stop, because you, sir, are going to have the honor, the privilege of choosing our winner of our Pro Trading Crate for the month of November. We got so busy last week, listeners, with all the vol on the screen and everything else. We didn't get a chance to name our winner or choose our winner. So we're going to do that now. This is for everybody who was active in the secret club during the month of November. If you want to get access to this, you want to get entered to the drawing for December, you know where to go, theoptionsinsider.com/secret club. In fact, dare I say it, maybe the Meatballs book could be part of the giveaway package we shall see. So, Mr. Meatball, all right, I have hit the button. We are now vacillating back and forth. I need you to just tell me when to stop, sir, whenever you want.
Okay. Well, I guess stop.
All right. Bam. All right. Here we go. All right. I got this number. Let's see. Who is this? All right. 1 second. Oh, one of our regular secret clubbers, Mr. Unlimited. Your number has come up, sir. You could thank the Meatball. You are the winner of the November Options Insider Trading Crate, sir. So you know where to hit up our producers. Send them your gear size for your exclusive Options Insider gear. You get a nice choice of your educational tomes out there. I do believe actually the Meatballs tome has been spoken for already. The remaining copies we had in the studio. So we have a bunch of other great books you can choose from. Our producers will let you know exactly. We got Jack Schwager, we got Dan Pease, we got Mr. Overbees. We got a bunch of great books in there you could choose from. And then the rest is up to us. We create the rest of your bespoke. I'm looking at literally a mountain, a studio-sized mountain of stuff here that we could cram into that box. So it's going to be a fun thing. So our producers will hit you up, let you know what you need to tell them, and then the rest is up to us. And look forward to stand by your mailbox just with glee and wait for it to arrive, because I guarantee you it'll be pretty fun and probably a little bit unexpected too, which is kind of the whole point of this thing. All right, Mr. Meatball, congratulations. Look at you just getting dispensed all of the goodies today. But A, if you have any enduring memories of the American Dream, have at it. And then B, more importantly, what the heck's going on with Vol today, sir?
I just loved his polka dot outfit. And yeah, as Mike said, he was not the most fit guy. So it was something to behold him wrestling. Was always a big fan of that. Looking at the market, yeah, we got a see a red, and it's actually way worse than maybe it seems. I think the thing to be paying attention to right now is the Russell 2000, which is just been in a free fall. Had a little bit of a rally, but even on Friday, as the S&P was hitting new all-time highs, the Russell could not get off the mat. Last week, I've never seen this before, and tell me if I'm wrong, Mark. Have we ever seen the VIX go from above 30 to below 20 in the course of a week? Because it happened. It happened fast. They absolutely came in and crushed vol.
I am hard-pressed to think of another example off the top of my head, sir.
I can't think of it. And so we're right back to 20. Feels like today's a little bit of a breather. I'm interested to see. I think tomorrow is really going to be kind of the key for the week. We also have quadruple witching, which I think could throw things for a loop. These December options, remember, have been around for a very, very long time. These listed, 3 years ago? And now they're starting to come off. So there is all kinds of weird pockets of open interest that you never know if things go south or north, what could happen, especially south. So that's kind of what I'm watching. Volatility index, it's up a little bit, adjusted for the weekend, even it's up a little bit, but we're heading into the holiday week. We've got the Federal Reserve talking midweek, which I think could drive things around, but post Federal Reserve, I'm interested to see whether how markets react. And so, for how much we're down, 1%-ish, feels kind of boring, kind of slow, kind of sleepy. We do have traders coming in after the volatility index itself. VVIX is higher. Bonds are having quite a day. TLT, IEF, all way higher. And again, ARK funds, we've been talking about some of the trouble they're having. You look at ARK, you look at AMC, you look at GameStop. You got to wonder whether, and maybe this would be a good poll, is the meme over with? And, certainly kind of gets that feeling with the performance out of AMC and GameStop over the last week. GameStop in particular, just an absolute nightmare of a chart. AMC doesn't look a lot better, though. So both those names getting absolutely slammed. So very interested to see where we are even tomorrow.
Uh-oh, you just had the temerity to say negative things about AMC and games, sir. So the apes will be coming for you post-haste. Prepare your Twitter accounts. Good times will be had by all. You know, it used to be the gold bugs were the most hardcore. Then it switched to the crypto heads were pretty hardcore for a while there. Now the meme kids have definitely moved into the driver's seat of that one. We shall see. We shall see. We shall all enjoy the collective hatred that is unleashed upon the meatball as we keep on rolling out to the land of Uncle Mike. No one unleashes hatred on Uncle Mike. How can you? He's Uncle Mike, the most positive guy out there. Mr. Uncle Mike, sir. What is lighting up your tape on this kind of weird, mixed, strange red day?
Yeah, it's kind of interesting with how it's going. A lot of this didn't happen overnight. We were actually ahead in the futures last night. So a lot of this sell-off has come today during the regular cash hours of trading. We've also, and a lot of this rally on the 10-year note, as the meatball alluded to, has come from just cash trading from where we're at. And that wasn't a big gap up or anything like that. This is just actual trading that's happening during the day, which in this day and age, we don't see a lot of that anymore, just because I would say about 3 or 4 years ago, a lot of movement has been happening after hours, and it's been a very gappy market. But today, it's definitely not the case. So that's where we're at with it. So what I'm seeing right now is that here's the big picture of what I'm looking at. A lot of fund managers are ahead on the year. And so a lot of fund managers, just because of the fact that we've had the bull market with which we've had, and so they're not going to get that much more money in gains, most likely between now and the end of the year. We have roughly 10 trading days left, and even less than that if you don't want to count the week between Christmas and New Year's, which is very low volume. And so this is a theory with which I have. I think that a lot of fund managers are taking money off the table, and they are sandbagging in a lot of ways. So I believe that with where they're going with it is not so much that they're bearish or anything like that. They just don't want to stick around to go to gain another 1% in the market or 2% in the market when they don't want to lose the 18 to 24% gain or whatever it is with which they already have. So I know that if I were a major fund manager, that's what I would be doing. And I'll be honest, I'm actually looking to get to start my next year positions now in my aggressive strategy. So I believe that is something that is going on. Now, of course, fund managers have objectives with which they have to meet and objectives of their funds. So are the major Fidelity and American funds, growth funds going to cash right now? No, not at all. But they do have wiggle room of where they can be a little bit more conservative. And so at this point in the year, since funds are based upon what their benchmarks are a lot of times, I think that there is some sandbagging going on, not necessarily so much in the mutual fund space, but definitely I think in the hedge fund space, especially if they've already beaten out the market by a good amount. So I do believe that that's going on a little bit. Also, what's happening is that we are getting some buyers in this 10-year note. And so I'm going to be watching very closely to see how this reacts once the Fed speaks this week. In terms of where the market takes it, where the volatility within the options of it goes as well. I think that's going to be something that's going to be interesting to see. And then my beloved silver is up a little bit on the day, nothing too crazy. We're sticking around that 20 mark pretty closely. And then just in looking at this, the market in and of itself, a couple of the sectors of note, we do have financials down over 1% and looking at XLF. We have energy down over 3% and looking at XLE. And so I think those are two of them to watch, keep an eye on. Of course, tech is down as well. So I just think that with right now, the 4,700 mark was and still is a tough nut to crack in the S&P 500. And I'm not convinced it's going to be I'm not convinced we're going to see 4,800 by year's end. I'll leave it at that. So interesting times ahead of us.
Interesting times ahead of us indeed. Speaking of year end, our question of the week this week. Listen, a lot of you have been battling back and forth on our questions about will VIX close above or below 20. We asked it a couple of weeks ago. It was a hotly contested issue We pushed it through to last week again as well. We'll get to the results a little bit later. We know where VIX closed, but where did you guys vote? So we thought we'd push this out a little bit and say, let's look a little bit farther out now. Let's go out to the end of the year. Quite simply, where will VIX close at the end of this year? Same range. We don't want to go crazy with it. We just say, hey, is VIX going to be above or below 20 to end the year? Get on over there to @options. Make your voice heard right now. Right now, our audience is exactly evenly split, even though it just went live a few minutes before showtime. So interesting stuff afoot out there. Speaking of interesting stuff, let's see if we have any afoot on the major indices. What kind of paper we're seeing coming across the tape out there today. VIX doing some paper, not an explosion, but, about a month ago, this would have seemed like a ton of paper because the ADB was obviously much lower. It's about 395, 402, something around that range. It's a lot higher now. The ADB is up almost 700,000, 692,000 in VIX right now, and seeing about 276,000 contracts on the tape right now. SPY doing over 3 million already, 3.01 million to be precise. The ADB about little under 5.5, about 5.43 million. So SPY looking firm out there. To the S also 917,000 contracts. The ADB about 1.63 million out there. The Qs also on fire, 1.28 million contracts already on the tape. The ADB 1.76 million. And Mr. Meatball was just talking about small caps. The IWM flavor also looking pretty robust, at least from a volume perspective today. 624,000 contracts on the tape. The ADB is threatening 1 million listeners, 945,000. That's some serious paper for IWM. Speaking of serious paper, let's see if we got that in store for us on the single names. This has been where a lot of the rubber has been meeting the road for the markets out here of late. Today, despite what we have going on in the indices, actually kind of light breaking in to the top 10 today. Only cost you $260. That's not nothing. That's not like, $150, $160 like we've seen on some very light days. But compared to what we've seen recently, we've seen well over 300,000 to break into the top 10. So not quite there today, but still a pretty active day. You'll see when we get to the top in a few seconds here. Number 10 is Microsoft. Good old Softy back in the top 10 at 260,000 contracts exactly. Number 9, AMD, one half of our symbol twinology. 292,000 contracts today. Number 8, it's Lucid. Got to have some EV makers in there. 306,000 for number 8 for Lucid. Number 7, it's Pfizer. Yeah, all that news about the virus and Omicron/Unicron driving them up to number 7, 316,000 contracts on the tape for them. Number 6, NVIDIA. 395,000 contracts on the tape. Day that ends in Y. We're talking about chips, so NVIDIA is going to be up there. Number 5, it's Facebook/Meta/whatever the hell they call themselves these days. 398,000 contracts. Number 4, we're jumping up again to get Mimi. It's AMC, the other half of our symbol twinology. Is it dead? I don't know. The numbers, at least from a volume perspective today, say no. But of course, a price action, bit of a different story. 612,000 contracts on the tape right now. So we jumped from 398 for number 5 to 612 for number 4. So the top portion of our top 10 looking pretty robust today. Number 3, yes, I said number 3. It's Tesla. 721,000 contracts. What could kick Tesla down to number 3? It's the old man. It's Ford. They said, get the hell out of here, kid. 984,000 contracts on the tape for Ford. Man, Ford having interesting, rallying firmly into the 20 handle not too long ago and giving up about $1 of that today, down to about 20.5. Still good for nearly 1 million contracts. Ford, man, this new Ford is certainly an interesting beast to watch and certainly to trade as well. And number 1, you know what I'm going to say? It's the king. He's back. He's reclaimed his crown. He's kicking all comers to the curb. It's Apple. 2.63 million freaking contracts on the tape already, listeners. Yeah, this is just, I think the technical term for this is absolutely categorically redonkulous. There's a ton of paper. By the way, before you guys ask, are these absurd weeklies going up again today? The answer is a resounding yes. As we speak right now, already about 200,000 of the 180s expiring, the monthlies. These are going out this week. Going up this week already. 172,000 of the 182 halves have gone up already. 140,000 of the 185s. And about 120,000 of the 190s have already gone up in Apple, listeners. We're holding right now at about a 178, a little bit shy of that, off about $1.50 out there. So yeah, you're talking over 600,000 contracts just in those top 4 strikes, which are all weekly calls, somewhere close to the at the money right now. So yes, there's a lot of weirdness afoot out there in Apple. Still, you knock off that 600K, you still got 2 million contracts. So this thing is just on another level out there. Who knew? Secret payments to China. That's all we needed to really kick this thing into the next gear out here. Speaking of kicking into the next gear, I think earnings are more kind of downshifting into kind of the tail end of their gear spectrum there, getting ready for the next tilt at the windmill. Still have some names popping off this week. We have Lennar, of course, on the home building front. That's on Wednesday. FedEx, everyone's talking shipping these days, so that'll be an interesting one on Thursday. And Rivian, this is their first actual announcement since going public a little over a month ago. So this is our first glimpse into Rivian. What do they have in store for us? Well, I guess we shall find out. We do actually have earnings move reports for both of those right now. You know where to go to find these. TheOptionsInsider.com. Click on the Options News and Articles tab. You can see it all there completely for free because we like you. Earnings move results, earnings season, and the newly minted earnings trades report. You want to buy straddles, you want to sell straddles, you want to buy calendars, you want to sell calendars. They got all that in, entries, exits, how they're performing, all that good stuff. Again, head on over to the website and dive in until your heart's content. Let's look at FedEx here really quickly. They're popping off this week on the 16th after the bell. As of this report, they're trading 246 and a quarter. By the way, these are hot off the presses right before showtime here. So freshly updated reports for all of you folks out there. The straddle they're pricing in $13.60. In the past, they moved about $16. So actually a little bit less juice on the docket here for FedEx, which is a little bit surprising, given logistics and shipping are one of the areas that is still very much up in the air out there right now. And Rivian, what the hell can we expect from this one? Let's find out. 114.66 is where they were trading. They were pricing in nearly $11.50. In the past, they priced in nothing because they just went public. So we have no idea. Is that a lot? Is that a little? We shall find out on the 16th after the bell, listeners out there. Also got, looks like Adobe before the bell on the 16th, 654.5 is where they were trading. They were pricing in nearly $40, listeners, 39.5. In the past, they've moved to 28.5. My goodness. You got $11 more juice being priced in there. That is interesting. That's one of the many tickers we have for you there. In terms of the season, how did we shape up, listeners? Well, it looks like it's pretty much as it winds to a close here. We're seeing the season just flirting with a break even. Didn't quite get there. 99%. That's still the best season we've seen by far since the start of the pandemic. The best week was the final week, 119%. The week before that, week 5, 99%. The week before that, week 4, 114%. So the latter portion of the season looking better than the first portion of the season. Week 3, 90%. Week 2, 58%. That was the dark part of the season. And week 1, 98%. So it started off with a bang, got a lot weaker, then came back and kept getting stronger pretty much throughout the rest of the season. Maybe we'll see some final adjustments. Maybe we can get it up to exactly 100% break even out there. Still very robust stuff over there for you. I mentioned the earnings trades and all that kind of good stuff. Find that all for yourself as we keep on rolling. It is time to unleash the Eye of Sauron. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody. Let's get weird. Let's get wild. Let's get whimsical. Let's see what our Eye of Sauron has in store for us today. Looks like we got some Lion in the Sand puts, and then we're going off to review territory here. Let's kick things off here as I make sure our notes are updated. There we go. All right, let's kick things off with this is I think this is a newcomer. I'm trying to recall if we discussed this ticker in the past. I do not believe we have. This is everyone's favorite, Park Hotels and Resorts, Inc. Ticker symbol PK. Trading right now $17.68, off about 70 cents today. It's not a good day for them. Decent year for them, all things considered, even though they are off their highs quite a bit. A year ago, they were trading not that far from where they are right now, about $1 lower. They were trading $16.69. They're trading $17.68 right now. So they're up $1 on the year. In between, they had a nice run during MEATBALL 1.0. They went from February 1st, $16.50 all the way to, looks like they topped out at about $24.67 on March 17th. So a nice run for them. And that was unfortunately the apex for the year. They kind of gave it back pretty quickly. They got down to about, looks like $20 right around that level on March 23rd. And then they kept bouncing in the low 20s for a while until June 25th. They kind of broke through 20 again to the dark side by July 8th, trading $19 again. And then they kept bouncing in the high teens, it seems like, for most of the rest of the year. They had a brief run from October 28th. They went from 18.25 back up to 21.12 on November 5th. And then they gave it right back again by December 1st, trading $15.98 again. So that's actually pretty much their 52-week low just earlier this month, actually, December 1st. $15.77 they bottomed out at for the year. So they had a sell-off, and now they're rallying again. They got up to about, looks like, almost $19, $18.93 before giving up the ghost again to where they are right now, $17.67, $17.68. So kind of been an interesting topsy-turvy year. Got out of the gate hot, then kind of sputtered for a while, then kind of tried to rally again, then gave it right back up towards the end of the year here. So let's see what our Eye of Sauron has found out here, listeners. Looks like it's found some puts, in particular some line in the sand puts, this time pretty much at the money puts. These are 17.5 puts, so interesting stuff. Going out to Jan, selling them 2,800 times. Pretty decent amount of juice. They got $1.05 for these bad boys. That's about, if you're wondering, listeners, a 47 vol on these. They actually got a little bit of price improvement. They were 95-cent bid. They sold them for 105. Again, nearly 3,000 times, 2,800 times. The stock was pretty much exactly here, so the stock hasn't budged since they traded these. And there's no earnings juice in there like you might expect for that level of premium there. The earnings are in February 24th. So does not seem like there's any earnings juice involved. It just seems like our old standby of a recently volatile name delivering a little bit of juice for the old premium seller. This time, Mr. Meatball, and everyone's favorite, Park Hotels and Resorts. What say you, sir?
Yeah, these appear to be a line in the sand. A lot of the hotel names and, resorts and everything have been absolutely crushed. It's been a very, very rough couple of weeks for some of these names. Park, a little bit of a rally back last week, but still well below its highs from November. It makes sense. Sell these, see if you can get delivery, and then look for Park to maybe make a rebound. So I don't have much of an issue with the line in the sand. They're meaty enough. You're collecting enough premium. The buy level isn't terrible. So, yeah, makes sense to me.
Yeah, I like these. I'm going to put these in our to be watched. Come back to these bad boys. You know what? If you said, listeners, I need a little bit more P ticker line in the sand puts around 3,000 lot size, similar vol levels, 40% vol level. You said, I need a little bit more of that in my life. We got you covered. Another newcomer here. This is Performance Group. Easy for me to say. Performance Food Group. This is founded in 1885 by food peddler James Capers. Who writes this? I love this. Food peddler. Now they distribute a range of food products. So there we go. It started by a food peddler in 1885 in Richmond, Virginia. That's all you need. So I miss the days of food peddlers and fishmongers. What we have lost in modern society. Right now, the ticker symbol is PFGC. Trading right now almost exactly $43, $42.99. Taking a little bit of a shiner today, off 266 or nearly 6%. So a little bit of an ouchie out there today. Let's look at the year and see what we're up to out here. Going back over the past year, they're actually off. It just went through their level from a year ago. So they're actually down now for the year, about 3%. A year ago, they were trading $44.30 and they're trading $43, pretty much even right now. So yeah, they've lost their year. Let's see. How did they fare in Meme Palooza? They kind of got caught up in it as well. They went from $44 all the way up to their 52-week high of almost 60, $59.76. They topped out on March 12th. They struggled to hold that level for a while. They stayed up to around 58 and change by April 30th. They fought their way back up there. Then they gave up the ghost down to $47 on May 19th. flopped around that level for a while, mid to high 50s. They got back up to $50 ever so briefly, end of August, and then gave it up again to like 44. And they've been bouncing in this mid to high 40s range ever since. And they had a nice sell off again in November. They got to 48.5 and they sold off on November 10th, sold off on December 1st back to 38.82, which also marks their low for the year out there. And since then, they have rebounded from that level. They got up to about 46 again on December 9th. So they had a nice rally in the latter portion of this Omicron rally. They got carried along pretty nicely. They went from about, I said, low of 38.82, their low for the year, all the way up to about 46.25. And now they're giving some of that back again, right back down to 43. So it's been a topsy-turvy end of the year, an aggressive start to the year, but they couldn't really maintain it. And they're well off their highs right now and pretty much flirting at their 52-week lows for the year. So net, it's actually a wasted year here for Performance Group, if you held Food Group, I should say, if you held it all the way through. So the family of this food peddler, perhaps not quite happy on the year's performance. Let's see if you guys will be happy with this one. Let's go back out. Like I said, similar to our first trade here, our Eye of Sauron sometimes has themes that it likes, and today it clearly likes roughly 3,000 lots puts at about a 47 ball because we got another one of those. These are also Jan puts. These are also close to at the money. These are the 40 puts going up 2,725 times for 85 cents. This is also a 46 vol. Actually, the stock was higher. I take it back. The stock was 44.66 when these went up. It's at 43 right now. So they sold these right before the sell-off. So probably a little bit of an ouchie on these bad boys right now, but still intriguing to see compared to our last name. Again, similar vol level, similar size, but the other trader was trading about 3,000 of the 17 half puts. He got $1.05 for those. This person sold the 40 puts and they got 85 cents. And let's see, earnings, same deal. There's no earnings in these. Next earnings announcement is in February. Mr. Meatball, I have a feeling I know which one of these you would prefer, but what are your thoughts on these infamous puts from our friend, the food peddler, James Capers, a.k.a. the founder of Food Performance Group, sir?
I mean, Food Performance Group, I mean, seriously, I not a huge fan.
So you're saying you'd rather sell these 17 puts for $1 than the 40 puts for 85 cents?
just a little. Just a little.
This one certainly puts that first trade in a different light, I think, having seen this one. Now, that guy's going to look at this and be like, oh, man, I wish I did those.
Yeah, you got to get the right amount of yield and, be aware of what you're selling puts in. I mean, I get it, 2%, but, 85 cents is not a lot, and there's a ton of downside risk there. I definitely like the 17 puts better.
Yes, so whoever our friend was who had a couple 3,000 lots of P-related puts, we like one of them better than the other out there. All right, let's go out. Speaking of line of sand puts, let's go review some now. We've already added 2 more just to watch today. We got to take something out. So let's go back all the way to the heady days of November 29th, listeners. We're going out to another name, which was a newcomer at the time. Actually, we have talked about him a few times since then. This is Confluent, ticker symbol CFLT. And let's see. I won't say exactly where they're trading right now, even though the stock's had a nice little pop since we first talked about this one here. At the time, on November 29th, listeners, we profiled the D65 puts going up 12,556 times. Paper crushing the bid for 66 cents. This was an 83 vol. The stock was at about $82 when these bad boys were sold. There were no earnings. The next earnings is in February. So these seemed like a decent line in the sand, all things considered. They got a pretty hefty vol, 83 vol. They were selling these puts for, a decent way out of the money at this point. It seemed like they were pretty safe. And if they weren't, they got the stock at a much lower level. And it seemed like that level perhaps it was not safe enough as we thought, not as safe as we thought, because the stock took a drubbing since then, listeners. Coming into showtime right now, it's 65.12. When we first pulled these up for review this morning, the stock was 63.5. The stock was $1.50 pretty much in their face already. These puts that they sold for 66 cents were trading for $2 this morning. These puts are still open. So this person was kind of grinning and bearing it and they were kind of holding on to their britches because these were in their face. As of right now, the stock has rebounded nicely. It's up $0.50 now. and it's up about $1.50 from its lows of this morning. So these are right back exactly to $65 on the strike right now. So this person's grinning and bearing it all the way down from 82 to 63.5. Now he's got a little bit of a rebound. He's still got the rest of the week to go, though. So as of this morning, this person was out $2 million because these puts were still open. Now it's looking better, obviously, because they're back to that strike. He's still out. They're going to be trading for more than 66 cents, but still. Intriguing stuff. Mr. Meatball, what are your thoughts? This person sold a line in the sand, 17 handles out of the money, thinking, hey, we're pretty safe. And lo and behold, they were not, sir. Until at least right now, they are safe again. But these puts are still open. They haven't done anything with them, sir.
I mean, that's the thing about selling puts. You have to understand that, yeah, you know what? These may seem out of the money, but especially in a highly volatile stock like Confluent, you can get into some decent trouble selling out of the money puts, unless you're really willing to take delivery. And who knows, maybe that's what they were really hoping for. But selling out of the money puts is great until it isn't. You sell a put and then the stock drops 60%, you can have some real problems. That's why the quality of what you're selling in is as important, and the willingness to potentially take delivery are as important as what you pull in on yield, if not more important.
Indeed. This is probably one of the first line in the sands we've seen that we profile a lot of them, obviously, listeners. That seems like it's come back to bite the hand that fed it. Obviously, these are not done yet. We have to start paying off December now because we can't wait till expiration. We'll have 1 million trades to pay off there. But so far, these were not looking good. But again, this has changed as of right now. So I guess we'll have to come back one final time. I thought we could pay these off today and be done with them. But I guess we'll have to come back one final time to see if our friend got wiped off the face of the earth. Now it's time to see what Uncle Mike has in store for us. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. Welcome to the block of strategery. It is the time for Uncle Mike to dispense his options, wit, and or wisdom. And Uncle Mike, dare I say it, it is that time, sir, because we are coming up against it. The traditional monthly expiration. Now, I know every week is expiration, so monthly expiration has kind of lost its luster. But as the Meatball alluded to earlier in the show, this is a bit of a special one because it is D's expiration, our final monthly expiration for the year. And some of these contracts have been hanging about for a little bit. So there's a lot of OI going to slough off the table by the end of the year. Going to talk about that on the Crypto Rundown a little bit later today as well. Spoiler alert, listeners. But Mr. Uncle Mike, sir, what do you have in store for us as we approach Expiration Friday, the last one for the year, sir?
Well, I just want to go through just some decisions that need to be made, that they should be made now and not on Friday, if you will. The first one is let's say that you are short options. If you're short an option and you're not levered, and what I mean by that is, let's say that you've sold a put and you have enough money in your account to where you're trying to get the stock put to you. And you're just going to say, okay, well, I'm okay if the stock gets put to me. And if it gets put to me, I'll sell a covered call next month. Or let's say you have a covered call on and you're fine getting called away and because you would have sold it at that price anyway. What I'm about to say doesn't apply to people in that situation. What I'm discussing today is going to be if you are leveraged to some extent, meaning that you have a put spread on or a call spread or maybe a naked call or a naked put or a long call or a long put that you're long, whatever the case may be, but you're at a point to where you don't want to sell the stock and you don't want to buy the stock. I want to go through some thoughts that you need to really ask yourself or to think about this week. So first off, let's say that you are in a regular stock option and you don't want to, you're in a vertical spread, let's say, and there are vertical put spread, and you're protected to the downside because you have the long leg of the put, and if the stock is above the short leg of the put spread at expiration, everything expires worthless, and we all live happily ever after. Okay, that's fine, but have an understanding that if the market closes on Friday at 3:00 Chicago time, and that put is out of the money, that all that put spread is out of the money, you're thinking, okay, I'm good. Well, you're not good. Because if something happens after market and the stock goes down significantly, then you are at risk just like you were before. And options don't trade after market, stocks do. And so with that, someone on the other side of the trade can exercise the option later that afternoon, and you could get a stock put to you that you don't want. Well, but Mike, I have a long put. I'm protected to the downside. My only risk is between the strike prices. Well, yes and no. Yes, that's the case while the option is valid, but once the price closes or once the market closes, then you can't sell that option anymore. So let's say, for example, that's 3 o'clock. Your put spread's out of the money, 3 o'clock Chicago time. Your put spread's out of the money. I'm done. I'm going to go drink an adult beverage and celebrate my option put spread expiring worthless. Stock goes down to between the strike prices of that put spread. So let's say you sold the 50, 55 put spread. Stock's at 56 when it closes, and then it goes down to 53 in the aftermarket. Well, what's going to happen is that person on the other side of that short 55 put, he's going to exercise his option. He's going to sell you that stock, and you're going to buy it at 55 when it's at 53. And you're thinking, well, Mike, I'm totally fine with that because I have that put option at the 50 level to protect me. No, you don't. It's already expired. So now what's happening is you're going into the weekend and you're going to own that stock and it's going to be levered. If you did a 10 lot, you're going to have 1,000 shares. You have 50 grand worth of over 50 grand worth of risk in that. If you did a 20 lot, you have a 6-figure risk on something that you only were thinking that you only wanted to have a 20 lot on. Think about this for a second. This is a very real risk you need to have an understanding of. Now, let's take it a step further. Over the weekend, that stock goes bankrupt or something bad happens to the stock. The CEO says everything is awful. And then the stock gaps down to $20 on Monday. Oh, well, Mike, I was protected. I got that 50 put in there. No, you don't. You are not protected. You have nothing. You just bought either 1,000 or 2,000 shares of that stock at the 55 level, and you took on over 100 grand worth of risk. Now, let's say that stock does go and get cut in half over the weekend. Then all of a sudden, you had a $50,000 risk when you were only planning on taking $10,000 worth of risk at absolute worst. So with that, I know I'm sounding paranoid on this, but every one of us has experienced something like this. Either we know somebody or we've seen it happen, whatever the case may be. I've never gone into expiration in that scenario. But with that, I can tell you plenty of horror stories through my years in the business, and so can Mark and Andrew and anyone else who's ever been on this show. It's a very real thing that can happen. Now, with that, if the option's way out of the money and you're fine taking on that risk, God bless you. But my opinion, if you can close out that spread for a dime or a nickel or something like that, get out. You don't want to take that on. Most of the time, it's probably going to stay out of the money and you're probably going to be fine. But that one time you lose the 100 grand, that's not going to be pleasant. Trust me on that one. Now, the same can hold true. The other thing that I want to talk about, and this can also hold true for a call spread with getting short shares and whether something along those lines. So if you have a vertical, you really don't want to go into the weekend with it. Now, if you have a calendar spread, you could end up being long or short a stock, but you also have that option further out in case something were to happen along those lines. But I would caution you because of the fact that oftentimes if you can get out of something for a nickel on Friday, the price on Monday is a vast majority of the time not going to be that much better. So in other words, you're oftentimes better off just buying to close at a nickel and then selling to open on Friday than you would be letting the nickel expire worthless. You won't get as much juice on Monday. That's the case most of the time that I've seen in my 20 years, and I'm willing to bet Mark would agree. Now, the other thing that I want to caution you on is let's say that you have an index option, such as the SPX or RUT, and you're thinking, okay, great. At the open of the market on Friday, I already know at the open of the market what the settlement's going to be because it's AM settled. And I'm going to just celebrate, know that everything's good. And I made it through come Friday. Once the market opens, I know that my option's out of the money based on that opening print, and I'm good to go. No, you're not good to go. The open that you see on Friday morning is not what the real open of the market is. So when you're watching CNBC or Fox Business or Bloomberg or whatever, oh, the S&P opened at 4690 or 4692 or whatever it is. That's not the real open because of the fact that not 100% of all stocks are trading at that moment. The real open is calculated based upon what the opening price is on all 500 stocks of the S&P 500 or the Russell, whatever one you want to look at. And it's usually not released until an hour or two into the market trading day. That's what the settlement number is. And if you're concerned with where it's going to be, and you're concerned that the market open might not be where you want it to be, get out on Thursday afternoon, people. So my message on this is understand what your risk is and really don't let one of these horror stories that we can all tell you from our days in this business happen to you. And that is the strategy block for this Monday.
Thank you for that, Uncle Mike. As we keep on rolling, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Really quickly, let's peer in, see what you folks had on the brain last week and now this week. Last week, we asked you, will VIX close the end of the week above or below 20? The magic answer was, of course, 1871. That's where it closed on Friday. And it was a hotly contentious issue all the way through until Friday, where just in the final hour or so of voting, we saw, obviously, VIX was hovering in the high teens for most of the day. So that helped kind of pull in some stragglers towards the end of the session, where it just ever so briefly, ever so minutely tipped into the below 20 camp. It closed 51.3% saying below 20, only 48.8% saying above 20, which is weird because that adds up to more than 100%. But Twitter's math and rounding a little bit strange over there. Coming into this week, we thought we'd extend that one more time. Let's go a little bit farther out this time. Let's go out to the end of the year. Quite simply, will we close the year above or below 20 from a VIX perspective? And right now, looks like below 20, just slightly sliding into the lead there, 54.5% to 45.5%. Again, the voting is young. This poll just went live before showtime. Get over there to Add Options. If it's like the last two, you guys are going to be fast and furious on this one. So get in there, make your voice heard. Will we end the year slightly elevated or perhaps not so much? Let us know. Add Options is the place to go. Meanwhile, it's time for us to go around the horn. Let's go to the greasiest of meatballs. Mr. Meatball, sir, a weird week, a weird kickoff to the week. What are you keeping an eye on for the rest of the week, sir?
Well, as I said, we got the Federal Reserve, we got quadruple witching, and then what is up with the meme stock? Again, we got to do a poll here at some point. Is the meme dead? Because right now, you look at a chart of GameStop and AMC and some of these names, and it looks super dead. So that is the three things that I'm paying attention to most.
That is an interesting suggestion for a question of the week. We'll have to put that out to our producers, see if they want to add that to the rotation. That's an interesting one. Is the meme trend, the meme stock phenomenon dead? What do you folks think as we go on out to the unklest of Mike's? He never was a meme kid to begin with, so he doesn't care if it's dead. Mr. Uncle Mike, sir, what are you keeping an eye on for the rest of the week? Oh no, the technology gods have smote him down once again. Uncle Mike, sir, are you there? Well, if he were here, he would tell you to do nothing but buy crypto and buy all the meme stocks. That's really what he's keeping an eye on as we wrap up this crazy start to the week. All right, listeners, there we go. But you don't have to go anywhere. If you're in the secret club, you're listening live, get a beverage, relax, maybe hit the restroom. I'm going to go pick up my kid because they shut down his grade for COVID. Good times we are all living in, listeners. But we'll be back in exactly an hour with all things crypto. Remember I talked about expiration and some size OI going off at the end of the year? Well, we got that tenfold in store for us in the crypto options market. We got Mr. Greg Magadini joining us to help parse all of that. Mr. Meatball, I know he's your great nemesis in life, so if you have any words for him, have at it. And then B, more importantly, where should folks go if they want to hit you up and learn more about the land of the pit?
Yeah, big fan of Greg. Make sure you listen because he's a smart guy. And you know, just great dude. If you want to read about all the amazing stuff that I'm doing and analyzing in VIX or the markets, you've got to go to options.com and check out the VIX Edge. I am writing it every day. It's all about volatility, all about trading. Going to give you some really good ideas. Go to optionpit.com and check out that blog.
Check them out, optionpit.com. And because I am a glutton for punishment, I will go back one final time to the land of St. Charles. A, Uncle Mike, are you there? B, if so, what are you watching for the rest of this week? And C, if folks want to reach out to you, where should they go? What should they do?
Well, first I was watching the fire trucks to make sure that I'm not sitting in a fire. I am not, so sorry about the quickness of that. So I'm not being burned right now. But watching, if people want to learn more about what I do, go to stcharleswealth.com or give me a follow on Twitter at Mike TOSAW, TOSAW.
There you go. Check him out. He's blowing up the YouTubes and the Twitter. You can see where it all began. stcharleswealth.com is the place to go. We got to go on out of here. But like I said, we'll be back in exactly an hour. Put some fun stuff into the live stream. And then back again to talk crypto. Back again tomorrow to answer all of your questions with our pro Q&A session. You guys liked him. You asked for him back. So we brought him back, Mr. Steve Sosnick over there, the chief options strategist at IB. Then, of course, your double dose of education on Wednesday, live boot camp and live OPR huddle. You guys love those. It's your final one of those for the year, so make sure you join for that one. And then back again on Thursday, episode 2 of the Option Block. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.